Hello traders, Gary Wagner here, 12:15 in Honolulu, 6:15 in New York on Monday, 13th day of March 2023, and this is the daily report for gold and silver. Over the last 3 days, gold has risen over $100 per ounce. The dramatic rise is largely a byproduct of a potential banking crisis, with two banks showing systemic risk. The California Silicon Valley Bank and Signature Bank of New York were the two in question. Over the last 3 trading days, we have seen a phenomenal increase in gold prices. The April contract 3 days ago had a low of $1,817 and is now roughly $100 above that, with April futures trading at $1,918.90. Today alone, it increased $51.70 or 2.77%. Dollar weakness was partially responsible for the dramatic increase in gold pricing today. The dollar gave up almost a full percentage point, 0.91%, and the dollar index is currently fixed at 103.205. But the largest percentage gains today in the precious metals go to palladium and silver. Palladium gained 7.91% and silver gained 6.85% or $1.40, with the most active March contract currently fixed at $21.91. Gold traders, it has been exciting over the last couple of days. Exciting due to some very scary news. The potential failure of 2 banks, one in California, one in New York. This morning, we did send out a trade alert, and we effectively raised our stop, which was sitting at approximately 1,848 to 1,898. If you recall, we are long from 1,828. We have now moved our stops up on 2 occasions. The rationale for moving it to that particular price point: one, the key psychological level of 1,900. And secondly, if you take a look at the activity that I've just highlighted here, you can see that it was acting as a level of technical support right at around 1,900 before it broke up and to the highs of 1,974 this year, and then marked the beginning of the correction from 1,974 down to these lows at about $1,810. In fact, when we look at it in hindsight, we can see that we have, in essence, a double bottom, which leads me to believe that we have most likely completed our ABC correction. Because when we look at it in the following manner, this corrective wave down here being our A, then our B, and then our final C wave down here, that would mean that we are now in a 5th wave, and that is exciting. Now, I don't expect it to be a parabolic rise up. We're currently trading at 1916. You can see this small candle. That is trading overseas in Australia. And the thing that I am noticing in terms of the potential is A, the CPI data is coming out tomorrow, and B, on a technical level, we have this gap between the high on Friday and the open today. What's most interesting about the relationship between Friday as well as today is that on Friday, the intraday high was just below the 50-day moving average. Today's open was just above that average. We are now, in terms of our fib retracement, it's a small data set. It's of the A wave here. We have now accounted for a rise of 61.8% of the drop. So I wouldn't be surprised if we see a little bit of weakness come into the market, but that's all going to be based upon tomorrow's CPI report and, of course, the all-important FOMC meeting that concludes on the 22nd of the month. For now, my recommendation is you maintain your current long position. We've locked in profits between 1828 and our new stop at 1898.60. So regardless of what happens, we have a nice trade under our belt. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.